Good morning for Friday, September 9th, 2022. It is almost 6:45 Eastern Time in the morning, and I'm pleased to do this video today because I think I might have found a way to go through the plans in review that are it makes it a little shorter and maybe a little clearer. And it didn't take long at all to do, even though it maybe looks like it was a lot of work. It wasn't, and it was kind of fun. Now, I want you to realize I make these videos. I've been doing them for the last couple of weeks. Something I used to do, not always in video form, but I used to always plan out the day, and I got away from it. And I got sort of myopic in my trading, where I was just really looking for shorter term things and kind of forgot about the bigger picture. I mean, I was aware of it, but I could come in and gunsling, shoot from the hip. And I just, I started to realize, I need to get back to this and articulating it and putting it out there in video. There's a lot more involved in that than just making a video. There's reasons for it besides even just my own edification. It's, he who waters himself will be watered, the Bible say, right? So if this helps one person, one trader, turn on a light bulb, great. There's really not, I don't really have many people watching. I don't know really who watches it. It could just be bots, but it doesn't matter. This is, like I said, and I've said several times in these videos, I'm doing it for my own edification. What I mean by that is that we need to have confidence in our trading. We need to have confidence in our plans, because when it comes time to execute, we need to be able to it helps you manage your emotions. Let me put it that way, because when stuff happens, you're ready. You sort of see something happen that you already anticipated happening. You rehearsed it in your mind, just as if you were going to go out and give a speech or a presentation. You might want to imagine yourself, visualize yourself doing that. That's all it is, right? But this is a 1-minute chart that you're looking at here, and I'm going to pull in the profiles for various reasons, but let's get to it, because one of the functions of this is actually hopefully to make it shorter. So yesterday I did a pre-market video, then about 10:45, 11 in the morning, I did a mid-morning update. I was pretty well done, and several of the plans had played out, plans 2 and 3, and we were looking at a possibility of going forward, anticipating plan number 4, which was exploit a fake out on a re-entry into the overnight high. I'm, the way the day planned out, listen, I couldn't be is more, I don't want to say surprised. I guess you shouldn't be. You do this long enough, you have to have confidence that you've gotten familiar with certain things, even on an intuitive level. But I don't have a crystal ball. Anything can happen. I have no idea. So I'm a bit humbled by the way this played out, as you can be. And if I had really believed in myself, I would have stayed here all day. Well, I did have some things to do, and there is a function of time where I just don't have the endurance. I'd like to get back to that. I used to be somebody who'd sit in front of the screens all day. I'd get up early, I'd do the trading, I'd be there throughout the day till the close. I'd watch webinars in the evening, you name it. It takes a lot to figure it out when you're, especially, I started quite a long time ago now, and as days go on, there's more and more traders, there's more and more education and all these kinds of things. And, it's a wild west out there too. There's a lot of stuff. And what do you use? Who's going to teach you? What is the right way? All that stuff you got to wade through. Okay. Anyway, sorry. I can wax a little philosophical on some of those topics. Let's get to it. I lettered this up here. This is a 1-minute chart. Just so you know, the vertical lines represent 30 minutes. So there's 30 bars in between each one of these little fields here. Think of it as like a football field, gridiron, A, B, C, D, E, F, all the way to M. I didn't go to the after the end of the cash close there, but all right. So I pull in my trusty little screenshot of my trading plan, and one thing I did that you may not notice right away is I rearranged the stories. It looks like I put hours into this. That's great, because it only took a few minutes to do all these little things, and I learned something along the way. I didn't really know how to split a table and move it around. Hey, just first time I had a need for it. So just took a second, and anyway, I moved story 2 and 3 up because they happened first. Okay, the first one, and I already made videos about this, was to short to the overnight low based on conditions and get short. Right. The next one was to get anticipate a move higher, a continuation from Wednesday, and get long on that, or get long once it's gotten above the prior high of day. Okay, all of that happened. Okay, but then the next thing that happened or no, one of the things that happened as well, I put story 3 in front of story 1, but there was a combo. There was 2 parts to story 3. The anticipation happened before story 1, and then getting along above the prior high day obviously took place after we got outside of yesterday's value area high. I don't know if you're following all this, but if you've seen the videos, it shouldn't be too hard. And if you have seen the videos, hey, thank you so much for watching. And by virtue of the fact, ipse facto, means that you're finding some value in it. That means a heck of a lot to me because, you know, this is a lonely business, a lonely game. And to convey or to impart something to somebody else is one of the great joys in life, right? To be able to pass something on to somebody. Kumbaya. Okay, so all right, so the next thing where we were was story 4. Okay, this happened in a very dramatic way. This was sort of amazing to me, and I came back and looked at the charts. I thought, wow, you know. So exploited fake out on the overnight high. Okay, I'm going to talk about that, but let's first take it again visually, piece by piece here. Remember those numbers if you can. So one was to get short. Now, when I made the video, okay, when I first made the video yesterday morning about 7:45 in the morning, no, 8:40 in the morning, we were trading maybe up in here. Now this chart, by the way, this is only, for example, this is, you see there's no overnight. You see how it drops from here to here? We were trading up near the, up near the point of control, wherever that was. I don't have the overnight on here. So there's quite a ways because look, if you probably barely see it. This is in 2s. So this is quite a, if I stretch it out, now it's in 1s. You know, it's quite a move, okay? Now it's, well, there's still a little space in there. But the point is we came way down by the open, and we were right on the overnight low, you know, when it opened up. Prior to that, there was some distance to travel, some room to capitalize on it, which is why when I do the gap ups and gaps downs and I want to trade a close of the gap, it needs to be 10 points or more, or some distance, right, to really make that worth doing an opening range trade towards closing the gap. Okay, all right, so just to give you a lay of the land here, the little circles, the red ones, are going to be an area, and they're fairly tight. I mean, they didn't like stretch this out and make them, you know. So please give me a break on that. I mean, I like to get in close to a level as possible or on the level. Sometimes if I think it's really it's a little volatile wide, I might say, well, I'm going to get behind it a little bit. If it sucks me in, great. But this is the point. It's the idea. All right. I'm just front running the kind of people out there who like, oh, what price? You know, it didn't even touch that line. You know. Well, look. That's why you know, if you watch the video on 2, 3, and 4. And I'll get to this. I took a short here against the value area high, but there were other factors of why I chose 87.50 versus 88.50. That's a whole point away. And look, it didn't even get there. Now, how did I know it wasn't going to get there? I didn't. In fact, it came up pretty hard. But that's where trading takes a long time. And you know, sometimes my own little judgments. It's like, why do I want to do it there? Am I being too like FOMO, fear of missing out, or is there a reason for it? What worked? All right. Well, anyway, back to like bringing it up to speed to the story number 4. The S stands for story. Okay. Story number 2, which is the first thing that happened. We opened right here and traded through, and the blue line's the overnight low. We traded down here. Okay. Well, I didn't take it, as I said. It was an open drive. All this thing fulfilled. It was great. I didn't get in on a 4 trader against it. I mean, I don't know. It just was too. It was just too rapid for me, you know. And so we turned around here, didn't get continuation. It did build a little volume, but then it started to come back. Now, I got long in anticipation, and that was a great move. And I also got long again. I don't remember exactly where, but the idea was to, on a back end, meaning we come back inside the overnight low, get long on a 4 trader or whatever means you have. I have my own entries, okay? You have your own entries and other stuff, I'm sure. So, all right, I got to quit talking like I'm not talking to anybody but myself, or that I'm talking to anybody but myself. That'll probably help as well, because I'd really like to keep these 10 minutes or less. It's not going to be 10 minutes less, I can tell you right now. At any rate, I also want to, safety tip, pro tip. Pro tip is start watching YouTube videos like this on 1 1/4 speed. Watch them that way for a while, and eventually you can go up to 1.5 speed, and you can go right away. But it's a little bit of a a jolt, just like if you stepped on the gas and it threw you back in your seat. But if you build up to it, you can plow through like recaps and market previews and webinars and stuff in about well, 3/4 of the time, because it it shaves off it's faster, obviously, right? Speed it up. All right, so you come back in. This was story 3, anticipation of continuation, and story 3 was also up here above the high, but we wanted to get in anticipation of this or on a back end. I front run a little bit. I got in here, and then you just get used to when, I don't want to necessarily say it's a stop run. I have no idea, but you want to get used to, or you do get used to these moves, the gyrations, right? So you could get long here. This was story 3. This was good this was a great trade. This is a trade, like I was done. It's like, okay, that's enough. It took a while, it took an hour. So we get up here to the value area high. Here was the short. This was story 1. Okay. Just a minute. Anticipate a pause, sell value area high. Well, and we also had some ideas that it might rotate lower or in this area, and I'll talk about that in a minute. Well, it came up pretty hard. That was good and bad. One, it had some momentum, so there was a slight chance it could just blast through it. On the other hand, this was a bit of a move where you get used to these things where it's like, okay, too far, too fast, it's going to come off. And there was 3 levels here. There's the value area high, the prior high day. There was the overnight value area high, which it's not shown on this chart. All right. And you can see this. Well, anyway. So I took a little, like, I don't know, 1.75, something like that. There's a lot more move because that was from like 87-ish down to, gosh, almost, let's see. Hang on, I'm curious now. This is how I get my videos too long. Okay. 73, 75. So that's like what? Let's say 74. 87 to 74, 13 points. I just took a little bite of that. But that was a nice trade. If I say sell value area high, that's the storyline. Does that mean we got to rotate all the way back down to the value area low? That's not what that means. Okay. So anyway, based on it was the right conditions where it was worth a shot to me on a very small size. All right. The next thing was in story 3, and again I already kind of made a video about this, but I didn't have this chart to present it. This makes it a little easier. We were to trade the let's see, get long above the prior high of day, and I had a couple ideas. One of them would be the floor trader. The other one was prairie dog. Prairie dog would be kind of like if we dip back in and then pop back out and then get long in that. But it never got back down here, so there was some strength. I didn't take that. I don't think I did. I think I was done after this value area high short. But where would you get long here? Hey, you got your own ways. You could have had this inside bar in the 1 minute and taken a pop out of that. I don't know. That's your business, okay? So we just, here, the blue line right here, very important, is the overnight high. I want to highlight this. I'm going to make it a little bigger just for, we're talking about that now. It traded, and I mentioned also the 4,000 level in my video. And the idea was, I'll put that on here, we were going to have a fake out. Let me pull this in here. Let's review this. Exploit a fake out on the overnight high. Look to trade short from the overnight high on rejection of higher prices. Market internals not heavy to the upside. Quick move back inside the overnight high. Thin volume above. Watch for rejection near 4,000 level. Well, we traded through the 4,000 level. I think it popped off a bit. 4,000. No, not really. It just kind of hung around there. It made its way through. Went higher. This was the pivot point, and these are all yesterday's levels, okay? And it came off back down to the overnight high, traded around there for a bit. So this was a bit of a ways. This is further than I imagined, but listen, like I said, I don't have a crystal ball, and I don't know the exact ranges it's going to do in any given moment. I don't know who's going to be playing this day. So let's look at the profile here. And again, we came up from all the way down here. All right, all the way down here, all the way up here. And we came out of the overnight high, which is this line here. And I need to, I lost my text for a while. Oh, I got it back. Oh, maybe it's not on this yet. Okay, so modify text. Let me put that in here. And if you use your chart, now you know how to do that. Put the overnight high here. And 4,000 was right here. I looked at, well, I mentioned that we'd probably go to 4,000. If we took out the prior high day, we're probably going to take out the overnight high. Then we're probably going to get to 4,000. And I was looking for it to fail back in. Well, hey, look, it went about 11 points higher. Was I wrong? No, it's really hard to gauge how far it's going to go. Like I said, I've said many times, the ES is trading like the NQ used to. These kind of ranges were really unusual a couple years ago. Anyway, so look what happens. So we fall back down, the overnight high, and it hits it, new TPO. But look at this, all right? Look at this. I'm going to pull the 1 minute chart back in. I appreciate your patience. I say it's going to be a short video, or try to be short, and it's not. But again, this is for me, not for you. And then put it on 1 1/4 speed. All right, so I don't really look at a 1 minute chart, and every time I go back and do something like this, I think, oh, I really ought to. I use a tick chart that's similar to a 1 minute chart. However, it is different in the way the patterns form, and I'm very familiar with how those patterns and how markets and price behave with that, and it's sort of internalized now. But very often I can see patterns, and the 1 minute chart can be exceedingly valuable for that as well. I think I need to start keeping it handy. I always tell myself I'm going to, and I don't, but maybe by using in my reviews that's going to help with carrying out my plans here. So here we come back down. Remember, each one of these areas is 30 minutes. So that's another problem. When you're in a hurry for these things to unfold, Well, look what happened. We have a pattern here. And I would have recognized this. I recognize head and shoulders patterns, whether they're inverted or right side up like this, pretty quickly, and especially in price action. There's a little clue for you. Start going back through your faster charts. Look for head and shoulder patterns. The right side up one near resistance and the upside down one near support, and start seeing how many times you see these things. And I like them with this little tilt right here. My favorite ones are the little tilt. In fact, flat's okay. If they're tilted like this, I don't really care for them. But like this little, kind of a shrug shoulder, I love it. Seems to work better. But anyway, so you got this head and shoulders pattern against the 4,000 levels, the left or right shoulder. And look at this. So you got your neckline here, which you could have already had in place like 10 minutes prior. Look at this move. Now, what's going on here dynamically? So we didn't get moved to the downside. We got fast rejected out of there pretty hard. Look at this. In 2 minutes, we're way up here. Okay, and that's a ways. Remember, this is in twos. Keeps going higher. Breaks your value area pretty strongly. Gets through the high of day and all that stuff. Gets through the 4,000. People are thinking this is you got to think like the herd. Just like an attorney needs to know the answer to a question before they ask it, right? You don't want to ask a witness a question you don't know what they're going to say next, because you might just end up holding the bag, looking like it's cast doubt on what your ideas are. But we got to think as traders. We have to start thinking, what are the laggards doing? What are the we want to be innovators or early adopters, right? We want at the best or the worst be early majority. We don't want to be the late majority, and we don't want to be the laggards. Do you know what I'm talking about? There's like 5 groups of people. You've got your innovators, they're the first. You got your early adopters, they recognize something's happening. You got your early majority, they recognize that a few people are seeing something. And then you got your late majority, it's like, oh, I better go this way. Then you got your laggards, like they get in way too late. By that time, it's over, all right, as related to trading. So here we go. People are getting long up here, and what happens? They get crushed and fast. This is one of those things where it's like, man, is somebody playing some game? Is there some like mega wealthy evil genius behind the scenes pulling the lever all at once. They conspire to do this. I don't know. It could just be market dynamics. You know, it just could be that's just the way it is, the market auction process. So here's what happened. We came up here, and the auction sort of ran out of steam, and we came back down, and then boom, it just flushed right on this neckline, right? How would you have got in? Well, you had a plan. You had a plan that if we fell back below the 4,000 level, didn't even take out the R1. Forget about whether you recognize this pattern. You're starting to see that we're back inside the overnight high. Maybe I ought to get short. So if you're like me, sometimes you get a little too big in a hurry. Once we dipped in here, you might have gotten short and gotten stopped out. Then the next time it came back down, now you're like, this time it's going to work. Well, maybe you're going to use this high. I don't know. I'm just walking through a scenario here. And you get short. Or you get short against 4,000 or whatever. You're starting to think, we came down pretty hard off. We got rejection. Because remember, pull this in again. What was the idea? Watch for rejection near the 4,000 level. Okay? Quick move back into the overnight high. Well, I don't know. This was a quick move back into it. This was a quick move back down to it. Relatively quick. 1, 2, 3, 4, 5 minutes, 6 minutes. Okay. See, quick move back in overnight high. All right. Well, did I get it right? Back down. Should I have said back down to that? I don't know. I mean, look, I'm making this stuff out of thin air. Early in the morning, the market hasn't even traded yet. I'm just looking at what's happened and thinking about what might happen today, and who knows when, right? This happened hours after the open. So that's one of the things. Like I don't have a crystal ball, but boy, it sure does help my self-confidence in my plans to like do something I've never done before. I've never talked about this in all the years about this happening. Why did I think that would happen? Well, I had a reason. Remember, if you watched my video, which, I was looking at, didn't have this. This was not here. Okay, this was not here. That is the day yesterday. We stopped right on this VPOC. This is a weekly. Each one of these fields is a week. Okay, so we stopped right here, and I noticed that it's like, wow, we got a real, low volume, everything right here, even low volume here. We might reject out of there if we get up there. In fact, I even at some point, I think in my the mid-morning update video, I drew a thing right here that we might trade back down here, right? So the overnight high was right up here, 96, I think it was. It was at 96. That was right there, 96. That was the overnight high. So what is that? That's falling back. That's a prairie dog back in here. Now we got up to 11. Look where 11 is. That's 11. So we traded up here, and here's that low volume stuff I was talking about. Here's some too. I mean, I didn't know it would get up this high, but there's the 4,000 level. So that anyway, the point being, that's where that idea came from. I thought, we might have a fake out going continuation, because if you look at the daily chart, the thought is often immediately going to be, oh look, we're like what happened yesterday, but even higher. I said the 50 and the 100 are beckoning, but like all of a sudden it's like, oh, we got an engulfment. And I was even thinking this. It's like, well, it could just, we get another candle just like this or higher and go up to these averages yesterday. Well, it didn't quite make it. In fact, it fell way back at first. And that brings us to another thing. So I wanted to talk about that. That's story 4, right? Story 4, check. Okay. Then this one, it happened, but I said 91ish to 35. I mean, I don't know. I was just going from in the concave, the edge of the bowl to the bottom of the bowl. Okay, if you remember from the video. So trade from high to low in back and fill of area from here to here. Well, we got a trade from high to almost the low, and said it could be choppy, go for bites, and does not support sustained trade over the prior high date. Well, that happened. So we might be thinking, well, We've gotten back down. We had that fake out and that failure. Maybe we are going to do that. So let's pull this in again, the weekly. And if you remember, and I think these are left from when I put them on here, the green ovals I drew from like this VPOC area down to this little where it pops out in the volume. And then I said, well, there's this. It's like, well, we could back and fill this area. Let me merge these together. I might have even done that. It's like we could just fill in this area. Well, look how much we traded in here. So this is A, B, C, and by the way, I drew the white lines from here to here where the low is, and this is this is when I had them split out, this oval right here. So 1, 2, 3, that's an hour and maybe 15 minutes. I mean, I don't know how much it spent below that line or above that line in the C period, but then in F, G, and H, and then, part of, I don't know how much time, a part of these TPOs. So we rotated in there. It wasn't what I initially imagined exactly, but this is something I talk about as well. If you're looking for exactness, then trading is going to give you problems. You got to adapt. You got to be quick on your feet. You've got to sort of like, you got to be malleable, right? So the initial idea, and I'm not going any direction in particular, but like I'm thinking, okay, we're going to trade, we might, it's not we're going to, I shouldn't ever talk like that, but we might trade from here to here to here to here to here, that kind of thing, and fill this in with some volume, okay? Hey there. I've got a little person here who's bothering me. Okay, come on. I think you should go over there. Thank you very much. Okay, so let me. That's the problem with this tool here, is you got to do it sort of manually. Let me get the pointer on. I can do it fairly quickly. Just use a delete. There we go. Okay. Anyway, so, well, it doesn't look like I imagined it to look, but was there still something that along those lines, the concept? Yeah. So when we flush down here, and that's what you call too far too fast, you're going to usually get some kind of retracement. So when I have a day like this, and I've talked about this, I'm into Fibonacci, man. And I look at, okay, well, where in the day is the halfway mark? Where is if I'm seeing like a wave thing going on, where's the 38.2% from the end of what looks like the terminus of what looks like a wave 2? That might sound like gobbledygook to you, but if I throw a Fibonacci from the low of the day to the high of the day at this point, at this juncture, this is 78.6. 78.6. It happens to be confluent with the pivot point of the day. And you can see we got a rejection from that. And then you got a higher low and rejection from that. Now this is small, right? But you got to think big, because this is in twos. So, we come down, let's look at it a little more closely. 58 and 78.6 is 57.25. So it came in here, came all the way out, went up to 54. That's 6 points. Came down here again, went up to, I'm sorry, I said 54, 64. Another stab down, and went to the overnight low. So you could have had, if somebody wants to stage orders like this is aggressive, this is more conservative, and then I know I'm wrong if we get down towards the low of the day, which is over here. Right? That may be too far away, but something like that. You get the idea. Here's your long, because you're anticipating now a retracement, this is a long way, a rotation back up, okay? And, well, and I wasn't there, but like also another thing, and this is a pro tip. When we have a TPO open up on the lows like this, and it came this far, this fast, let's imagine where the bars might paint. Are they going to go from here, from like the lower like 20% of that, the range of that bar, continue downward? Are we seeing that in the market internals? Are we seeing that in the way the order flow is going? Or is it likely now we're going to get that activity and it's going to like come back up? Okay, well, so here's your rotation, right? Now we didn't get kind of far away from the. I don't know what would give you a clue. This is where to sell. I don't have like cumulative volume areas put on here where this might be an edge. I don't know if it is or not. It could be. So, but I put it in. This is where it rotated back down. That would have been a nice trade to get short if you had a reason to go short here. And again, anticipating, hey, we might rotate in a value area. We might even get to the value area low on a new TPO. And that would probably be your ruling reason is like, okay, now we're back in. Maybe we're going to get an 80% special situation to the downside. And why would somebody have bought right here? I don't know. I'm just, I didn't put anything here because it's sort of, well, I can tell you one reason right here. We got back through here, but like all of this, right? Rejection out of that little trading range here. And I draw trading ranges like this, like that high down to the swing low. Okay. And that's another reason if you would have had that on there to maybe think, well, now you got another confluent reason. You popped out of it. Actually, I like this a lot. This would be a great trade idea for story 5 because you came into this trading range, you fell back into it. I mean, it isn't the best example of a trading range because we came above it, came back in and got rejected out of it. Is it still valid? Yeah, I don't know, in the intraday time frame, let's say it is. Why not? You take a shot. You had other reasons to get long too. So just throwing one more. This is like a soup. You just throwing one more vegetable in, right? All right. So let's see. A pop out of here, right here. That might have been a reason. Now, I don't like it because you've been trading back into the settle. But is the settle still valid at this point? I don't know. I say there's something going on because there's churning around it. All right, I'm getting a little too long in the tooth on this, but there was story 5, right? And then one last thing I want to show you, or myself, is on the 10-minute. So I don't look at well, I've talked about the 10-minute chart, okay? Here is the 10-minute. What are you doing? I'm getting attacked over here. So you had this potential trend line, low, 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 right? And then a break below. So that's another way to look at it. This was, remember I talked about the one-time framing? We're one-time framing on a 10-minute, one-time framing. We stopped one-time framing. Then we couldn't get back to half back. Then we couldn't take out this high. Then we had another lower high. And then we had this trend line. Well, this might have happened so fast, you want to switch to time frame. A lot of times when you break a trend line like this, you want to see it come back up and get short against it. That's the most conservative way versus taking it as a breakout. But remember, the overnight high was at 96. Okay, so I don't know what happened in here. I think there might have been some backup. Let's look at the 1 minute. Got to be thorough, right? You can shut off the video anytime you want. Actually, we popped back up above. No, wait. This was an F period, so no, it didn't. It just came straight down. But again, there's the 4,000 level. There's other reasons. Another thing is I don't really like these, but sometimes there's like a nested head and shoulder inside a head and shoulder, which is right here. So this is not my favorite thing to do, but again, that is a potentiality right here. Came down, could have got short against the 4,000 level. Expected a little bit of a churn situation because of the overnight high, and then boom, you'd have been well positioned for that move, right? All right. Well, I just love talking this stuff through, and I hope it's of value to you. This right here yesterday, this story number 4, and recognizing that might happen so much later in the day and the way it played out, just very, very. The concept was exactly the same, but went a little higher than maybe I was thinking. But everything from the swift rejection to it just really helps me. It's made the last couple weeks of putting in the effort to make these videos and talk it through, experience criticism from certain individuals and all that kind of stuff. Totally worth it. Totally worth it. And I am trying to take some time to shore up a few other things going on, and this is coming into rollover. So today might be the last day I do these with such intensity. But at the same time, until I run out of steam, I may be popping these out. If you're finding them of value, it'd be great if somebody made a comment and said so. I'd appreciate it. And I am trying to get them shorter. Just bear with me. Again, throw them on. Get used to my voice going at 1 1/4 speed. And then maybe jack it up to 1.5, and that'll help. So, all right, thank you very much, and I hope you make a great day. And I've yet to make a pre-market for today, so I may or may not do so. It's been an intense week. All right, thank you very much. Bye.